Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, December 27th at about 12:30 p.m. Eastern. Before we start, please know that all of us at ToniTurner.com wish you and your loved ones a happy, healthy, and very prosperous 2025. And now, on to the market. Tech and growth stocks are dragging Wall Street's main indexes lower so far today at the end of an upbeat holiday-shortened week driven by expectations around a traditionally strong period for the markets. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $591.43, just about 2% below its recent all-time closing high. And it's that little tiny green candle you can see. That was the recent all-time closing high. That was on December 6th. At $607.81. That's about 60.78 on the S&P 500 itself. Now, as you can see here on this daily chart, during the past couple of weeks of trading, we've had volatility come into this, what was just bobbing along at a very nice, serene pace market. So the SPY has gone from in November and the first part of December, just kind of walking up its 20-day moving average, the red line you see here. And then all of a sudden it stumbled and fell on Fed Day because some comments were made that maybe there wouldn't be quite as many rate decreases in the coming year. So that took the market down pretty dramatically. And so it went from, again, serenely walking up its 20-day to stumbling and falling below the 20-day moving average, the red line. And that line right now is coming in at $600.95. So it fell below that line, that moving average, then fell below the 50-day moving average, which is coming in right now at $592.59. Then it fell down to the December 20th low at $580.91, call it $581 if you want. Then it rallied back up, went back through the 50-day moving, through the green line, the 50-day moving average, up to the 20-day. And look how this 20-day acted as resistance here. It was a hard stop. It was like, oh, no, you don't. And so the price made it back up to the 20-day moving average, got hit on the head, and then yesterday and today rolled back down to the 50-day moving average. So again, at the moment we're trading about just a few cents below the 50-day moving average right now, just a few cents below that. We know that for the most part, and you can't see October 2023, certainly on this chart you can't see it, but we know that for the most part, since its October low in October 2023, and that came in, the SPY back then came in, that low was at $409. We know that the SPY, for the most part, not all the time, but it's been walking up its 20-day moving average. I mean, it's really been incredible gains. And from that low at 409, back again in October of 2023, to its recent high at 607.81, which is this little green candle we pointed to, the all-time closing high, the SPY has made a 49% gain. And we've talked about that. Can't complain about that. You really can't. Now, of course, there's got to be drama in the short term and in the long term. Don't forget, the market trades in cycles, and that goes from yearly charts and monthly charts, long-term charts. That goes down to 5-minute charts. The market trades in cycles. And so we know that from the July highs back here, we look here left on the screen, from the July highs at 565, we know that this, and the sky was just bopping along like it was just a month or so ago, bopping along the 20-day moving average, but it got up to that. At the time, it was the all-time high at 565, then fell like a stone down here to open on August 5th. It gapped down to open at $511.64. That was like, oh my gosh, then rallied back up to 565 like nothing happened, and then pulled back a little bit back in September down to 539, then rallied back up above the 50 and the 20-day moving average and started in its uptrend again, with an uptrend being defined by a series of higher lows and higher highs. So moved back up into the uptrend again, continued up the 20-day in September and October, dipped just before the election here to 568, then gapped up on election day, and this was the gap up on election day right here, and continued to climb, climbed up to this high at around 600, then back down to the 20-day moving average, and again has been walking along nicely up until we got this volatility into the market in the past couple of weeks. Again, December 18th was rate cut day, and that was a pretty dramatic move there on that day. So it's been down here to the lows and to this low down here at 581, almost 582, then rallied back up through the 50-day, hit its head on the 20, and came back down to where we are now. So we say, well, where's now? We got to look at what we have to deal with here. Nearby resistance here is definitely at potential. We don't know. It could maybe go over. Nearby resistance here is at the 20-day at 695 cents. Call it 601 if you want to, and then back up again here at the all-time highs at 608. Nearby support, if today the SPY can stay at or above the 50-day moving average, would be at around $592. And then we can see down here the December 20th intraday low was at 581.91. Make that for 582 if you want to. Then we can see the November low here at 568. If I can draw a straight line, it comes in at about there. That's going to be an important potential level, support level for the SPY. If this, what we'll call a pullback, if this pullback continues into the first of the year, this 568, 570 zone here, I believe is going to be an important place, important level for the market to hold. So do remember, keep an eye on that, and remember that next week it'll be a shortened week again, with the market being closed on Wednesday for New Year's Day. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. This ETF follows the NASDAQ 100, which holds the top 100 non-financial stocks in the NASDAQ stock market, including, and the index includes large cap momentum stocks like NVIDIA, Meta, Apple, Tesla, Alphabet, all of those. Now, when I captured this chart today, the Qs, or the cubes as we sometimes call them, was trading at $518.69. That's 3%, right down here, 3% below the cube's all-time closing high, which was on December 16th at $538.17. So just 3% below that high. At the moment, the cubes are trading below their 20-day moving average, which is coming in at $523.38. But the cubes, unlike the SPY, are still above. It's still above the 50-day moving average, which is coming in here at $509.56. Now, we can look back real quick here to these July lows. Excuse me, I should say the July highs is where I should have started here. The July highs, that was an all-time high for the cubes back in July. Look left on your screen and that came in at about, that was an new all-time high. That came in, the cubes came in at about $503 at that point, then made a 16% dive lower to the August 5th lows, and that low in the open was 424 for the cubes dollars. Then it rebounded in the following 3 weeks, kind of like the SPY, but the cubes are always way more dramatic, so rebounded really fast back through the MAs, made an August high at 486, then rolled back down to September low at 448, almost looking like it could become a little inverse head and shoulders, which is always a very positive pattern. So then moved up and started walking up the 20-day in September and October, down to the 50-day for a couple of days right before the election, then gapped up like the SPY did on election day, and then popped up real high for that, dropped down back to the 20-day, then marched back up the 20-day here. We talked about it here. We talked about the cubes and how price was trading at such a very high premium to the 20-day moving average. We could have used the 50-day, either one. But when you see price trading this high on any asset above the 20-day moving average, for me, that's when I start raising my protective stops, because profit taking will come in. Remember that part about trading in cycles. So we did have the December 18th fall day because of the interest rate because the interest rate was lowered because of the comments afterward. And then it fell down to price fell down here just above the 50-day to 509. Then rallied, and then pulled back today again to where we are now, to $518.69. We have potential near-term price resistance at back up here at the all-time high at 500, and we have it, excuse me, I'm looking for this all-time high again, at $538. So we have 538, 539, that's resistance. Then down a little lower here, we have this coming in at about 527 or so. The 20-day is going to have to be called potential resistance here at 523, and we have support down here at 509, potential support from the 50-day moving average, also from this low price right here, this low a few days ago. Then we have the October highs coming in here at 500, 501. That could be potential price support. We have the October low coming in at 484, and of course right down here, the 200-day coming in at 474. So a bunch of potential price support should we need it. These October lows here, just like on the SPY, 484, that's going to be a line that to me is going to be very important should the Qs decide to roll over and take a breather here. And it could happen. Remember, price can't go up unless it comes down at some point. So it's not all bad. Sometimes it's, as long as we're aware and know what to do, sometimes it's good to have a breather in the market or a little pullback. Again, next week is a 4-day week, so please mind your protective stops. Our final chart today is, and we've traded this one other time, our final chart today is a daily chart of the Global X Data Center and Digital Infrastructure ETF. The DTCR is the signal. It has 25 holdings in it. Now, this is not the usual Magnificent Seven, so don't be looking for that. And actually, I for one reason I chose it is because it doesn't have the Magnificent Seven in them. I want to keep an eye on them for a little while in this pullback, in this breather that we're experiencing. But at any rate, this is an industry group, I think, that does hold some value, definitely, and maybe in the longer term. We'll see. Anyway, it has 25 holdings. Top holdings include Digital Realty Trust, Equinix, American Tower Corporation, Crown Castle, and some other global stocks. Now, when I capture this chart, the DTCR was trading at $16.65. Now, I'm going to just tell you something. It's not going to be on this chart. I looked at a long-term chart, as I always do. I looked at a monthly chart of the DTCR, and I saw that the ETF is pretty new. It was initiated in October 2020 at $14.66. From there, it rose to an all-time high in September of 2021 to $19.09, so call it $19. Then fell to an all-time low in October 22 to $11 about. Then took off at the end of 2023, rallied, dipped, and rallied to where we are now at $16.65. So if we look at this daily chart, today's daily chart, let's go back here and look. Everybody had an August low, it seems like, and DTCR was no stranger to it. So price was moving up in July for this, look left with me, moving up for this ETF in July of this year, then moved down, had an August 5th low here at $14.71. Then it took off and rallied pretty dramatically in an actually pretty uptrend here. It moved up high here, and it moved up to a high here of $17 in September, $17.71. Now look what it did here. Then it pulled back, then it rallied back up to like almost the same place to October high at $17.98, so that's just a few cents. So we had it hit this high, but it couldn't, the buyers couldn't make it go over. They couldn't make it go higher, and the bears pushed it down. So then it came back down to this November, bound down here in November to about 1670 or so, then said, okay, we're going to take another swing at it. Came back up and made a December high of 1798. When you see anything have three highs, make three highs that are reasonably coordinated and they can't get over it, you're going to be pretty darn sure that if buyers can't get through on the third time, you're going to be pretty sure that at least in the short term, there's going to be some profit taking come in, which is exactly what happened here. And so it sold off a little bit. It fell down to the December low down here to $16.16. Then not quite to the 200-day, but down, definitely down here. And that might have been interest rate day right there, I'm not sure. But it did push down here and then rallied up in the last 5 trading days, again to where we are now at $16.65. So I'm going to keep an eye on this. Now, to tell you the truth here, I'd rather, going into next week, I'd rather it come down here for my entry purposes. I'd rather it come down a little bit to get it a little lower price here. But in the coming week, if the DTCR can stay above the 200-day moving average, which is coming in at $15.96, if it can stay above that in the next week, I will buy a small position of the DTCR for my trading portfolio. I'm going to put a stop in below the 200-day moving average down here at 1575. Also, real quick here, look with me. If we looked, I don't know if I can draw backward or not. Okay, look at this low right here, this like August, September 1st low. See, that's potential support. And if I can do it and draw a straight line, that comes in also right at this 200-day moving average. Whenever you get price support or resistance, whatever it is you're looking at, whenever you get that and it comes in at the same place as an indicator, or in this case a moving average, it's coming in at the same price, sometimes that will give added potential support. So just something I saw. So at any rate, if in the next week, if the DTCR can stay above its 200-day moving average, if it goes below that, I don't really want it. But if it stays above that at $15.96, I will buy a small position, and I am going to put my stop in at $15.75. If and when the DTCR can rise above $17.70 and close above it, I want it to close above it for 3 consecutive days, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the DTCR in the coming week. And now, please know, and you may know this already, that at ToniTurner.com we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Swing Trade Successfully, that's this one right here, shows you how to enter during price upswings, grab the sweet spot from the price move. Okay, grab the sweet spot like that. I call it the center of the Oreo. Grab the sweet spot from the price move and pocket your profits before price starts lower. You'll discover how to trade with my Sleeping Tiger setup and use it over and over again. I use it over and over again to make consistent profits, and I've taught it for 20-some years, and a lot of people love that Sleeping Tiger setup. Our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. From our ever-popular 7 steps to successful trading, to, again, how to swing trade successfully, trade the trend to profits, another one I love, how to read charts, great for novices or anybody wanting to brush up, 3 winning setups, great for short-term traders, Bottom Fish Like a Pro, another one of my favorites. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen or simply click on the orange button below. Until next week, Happy New Year. Keep green on your screen. I'm Toni Turner, and this is The Market Now.